Welcome back to my channel. Have you ever wondered why do professional traders use two or multiple screens for their trading analysis? This could be because they're using SMT, which stands for Smart Money Techniques. It's a trick that professional traders use to spot where smart money is moving. And by the end of this video, I promise you that you will learn how to recognize bullish and bearish SMT divergence. You'll also learn how to pick which pair to compare, and finally, you will know how to execute a simple strategy based on SMT. Essentially, SMT is a price divergence between two highly correlated assets. This could be EUR/USD and GBP/USD, or another good example is S&P 500 and Nasdaq 100. So let me show you an example. Let's just imagine that on the left hand side we have EUR/USD, and on the right hand side we have GBP/USD. And what we notice straight away is that EUR/USD makes a higher high, and we can mark this with a line, naming it SMT. And on the right hand side, GBP/USD makes a lower high, and we mark that as SMT as well. And this is an early sign of a market reversal. This means that institutional investors in GBP/USD are pulling out of their long positions much earlier compared to investors in EUR/USD. Because of this divergence in price, we can expect that one of these assets will follow the trend that another asset has set earlier. As in this example, GBP/USD has started showing weakness, and we can expect that EUR/USD will start showing weakness very soon as well. Because in an ideal world, they should be both making higher highs and going higher, but once we see divergence, we are starting to anticipate a reversal. Obviously, we want to pair this SMT with order blocks, FVGs, sweeps of liquidity, anything else, but we shouldn't use it just on its own, okay? There's also two types of SMT, and this was a bearish type of SMT. Now I'm going to show you a bullish type of SMT. So this is a bullish type of SMT where one asset makes a lower low and the other asset makes a higher low, which we mark as SMT as well. And this combined is an example of a bullish SMT. Here I've highlighted the instruments that are highly correlated with each other. In the Forex industry, we have EUR/USD and GBP/USD, which in my opinion are the best ones. I personally trade them and I really like it. The next one is EUR/USD and DXY. DXY is a dollar index and it's composed of EUR/USD, GBP/USD, USD/JPY and some other Forex pairs, but EUR/USD is the biggest one, which comprises 60% of the DXY value. So they are highly correlated. These first two are very important for trading, and they're only ones that I personally use for trading. I don't trade anything else other than EUR/USD, GBP/USD, and using DXY as a confirmation of SMT and for my directional analysis for EUR/USD. Then you could also trade EUR/USD and USD Swiss franc, but they have negative correlation. So if EUR/USD goes up, then Swiss franc will go down. You just have to inverse the chart on the right hand side here and invert the scale, press that. Then we have a positive correlation of AUD/USD and NZD/USD. However, I don't personally trade them. In indices, we have the standard pair, which is S&P 500 and Nasdaq 100, works really well. But however, unfortunately, I don't trade them. The next one is Germany 40 and EU 50. They are also very good. I used to trade Germany 40 and EU 50. I quite like it. But again, I think EUR/USD and GBP/USD is really everything that I need. And as I've shown in my videos, I've proven to pass the challenges in just 2 weeks and even less than that sometimes. The next industry is commodities. So we have gold and silver. They are highly correlated. You can find SMTs between them and confidently trade this. Another pair is also DXY. So we can use XAU/USD and DXY to sync between them and find SMT. But bear in mind that they also have negative correlation between them. So if gold goes up, DXY usually goes down. The last one is US oil and UK oil. Some people prefer to trade oil because it's quite volatile and it's also highly reliant on news. So for those who like it, this is the pair that you want to follow. And finally, crypto. So the standard pair is Bitcoin/USD and Ethereum/USD. Here are all the main instruments that are highly correlated. So if you want to find SMT, I'd recommend looking in these pairs to find the best results. Moving on from theory to practice, how do we use SMT to our advantage to find the best trades and the most likely reversals in the market? So I would like to use a trade that I placed yesterday on GBP USD. It was a short position which totaled to 4.6 RR. Also, if you'd like to follow all my recent trades and the recent market analysis, please follow my Telegram channel, link in the description of this video. Specifically for this trade, I used 1 hour time frame as initiator for this short position. So if we go on a high time frame, we can see that EURUSD kept making lower highs while GBP/USD was making higher highs. This is already an indicator that price may reverse as institutional investors and traders started reducing their long positions in the market. Then if we include the market sessions indicator on both of these instruments, we can see that we got a really nice pin bar which swept Asia's liquidity here, right, on GBP/USD. I'll zoom it in. And then we got an engulfing pattern. This is already a sign that price is ready to reverse for me, including the fact that we have SMT. Okay, then if we drop on a 15-minute time frame, I noticed that we closed below the IDM and we also disrespected the first order block. So the next target for me is this low. Okay, ideally you'd want to target Asia's low, but I also went for the break because there was nothing in the way. Then I was waiting for price to come to the OT area on the GBP/USD. Right, price came into the GBP/USD area, but that wasn't enough for me. I wanted to see some sweep of liquidity or some further SMT. And what do we have if we just remove the Fibonacci to make it more clear? We can see that we got a further secondary SMT within this OT area. So let me just mark it for you. GBP/USD made a higher high, while EURUSD has shown weakness. Do you see that? This lower high on EURUSD is completely different to the GBP/USD, which made a higher high. So this is a very strong sign for me that the market is ready to reverse, especially when it came to the OT area, formed a secondary SMT on a lower time frame after the sweep of the Asia session. So this would be an A+ setup for me. Here is another example of how we can use SMT in the combination of EURUSD and US dollar index, which you can also call DXY. But first of all, let's invert the scale of DXY to make it easier to spot SMT. So what we can see is that EURUSD made a sweep of this low, right, which was also a market session liquidity. So this is New York and this is London, while DXY has failed to do a sweep. So as we can see, this low is higher than this low, and therefore this is already a SMT between these two assets. Okay, SMT here and here. And then we had news following up, which has caused this massive bullish move on EURUSD. However, what has caused the reversal is the SMT divergence. Institutional traders, they were already buying long positions, and they knew this already before the news even occurred. So before the news, they started buying up, and we could see this change already in the US dollar index. And after all, price just skyrocketed as soon as the SMT formed. Okay, this is a very good example of how you can see that SMT is a very early sign of a market reversal. Coming up to the final example of SMT in this video, I'd like to emphasize that it doesn't make any difference on which time frame you're using SMT. It works on every single one of them, whether it's 1 minute, 1 hour, daily or weekly time frame. So in this example, we have 1 minute time frame where EURUSD has come into the OT area and it formed SMT on 1 minute time frame with DXY. So as you can see, EURUSD has made a lower high while DXY has made a higher high. And just given this, you could have already anticipated some short positions, because especially EURUSD has come into 15-minute FVG. If you were to go up on a time frame, there would be 15-minute FVG. I'll show you in 1 second. Here it is, yeah? So just like that, you could already call a really nice trade. For example, if you wanted off the break of structure, and put your stop loss here, targeted the low of London session, it could have been an amazing trade, or perhaps you could have just taken partials and already been in profit. So the main point of this is to show you that whenever SMT occurs, market tends to reverse. So just as we got here, okay, you can expect some reversals and go along with the flow. This is it for this video. I hope you really enjoyed it and this was useful for you. If you have any questions, feel free to ask me in the comments under this video, or subscribe to my Telegram channel and ask me directly on Telegram. Thank you.